I'm just happy to be with you here today for this launch of Chora Plan. And Chora is a Swahili word meaning drawing. But here it's an issue of being able to draw a plan on some of the issues that we've mentioned: savings, investments, how we make our payments, how we formalize ourselves.
The finance and insurance sector continues to be one of the key services sector driving Kenya's economic growth. But much more can be done to expand the sector and further catalyze our country's growth. As you can appreciate, the finance and insurance sector is indeed the engine of the economy, given its pivotal role in financing all the other sectors, and therefore, financial inclusion is critical for sustained and inclusive economic growth. In this context, I'm glad to note that access to financial services has expanded threefold, from 26% in 2006 to 83% in 2021, based on the 2021 FinAccess Household Survey. We are currently in the process of updating the FinAccess Survey and look forward to the updated results later this year.
Studies have shown that there is a direct correlation between financial literacy and levels of savings. To contextualize the need to cultivate a saving culture in Kenya, a 2021 Global Financial Literacy Survey indicates that only 38% of Kenyans are financially literate, compared to 40% in Tanzania and 42% in South Africa. Our saving rates lag at 13%, which is far below the Africa average of about 17%. Faced with this reality, action must be taken. It is through initiatives such as the Chora Plan that we can reverse the dimming financial health among the population for prosperity as individuals, entrepreneurs, and as a nation.
In today's fast-paced world, a fast-paced digital world, understanding the basics of financial management is more critical than ever. From budgeting and saving to understanding credit and investing, financial literacy helps individuals navigate an increasing complex financial landscape. I think gone are the days when we had fewer players in the financial ecosystem. We have more players. We have, not just banks, we've got fintechs, we've got telcos, we've got ourselves as international schemes. So the financial landscape is more complex. And we also need to recognize that financial literacy is a key component of economic empowerment.
KDIC comes in with two roles and responsibility. One is to provide public confidence that yes, all of us have money in our bank accounts, and that bank can fail and you can lose that money. But we are saying, look, we are there for you, and in the most unfortunate event that our primary regulator, that is the central bank, maybe things have gone haywire and they have chosen to close that bank, still you not lose your money. So this is a cushion, this is a stabilizer to the Republic of Kenya, Then the second role which we play is to contribute to the financial stability. So we are complementing the role of central bank to make sure that when this bank is closed, central bank have made a decision that this bank is no longer viable, and they've taken that prudent decision to close it. Yes, we are going to make sure that that bank is resolved promptly, because banks, we normally say like an ice cream theory, if a bank stays longer in receivership or in limbo, there is a likelihood that resolution is not going to help much. So the KDIC comes in handy to ensure that there is a timely resolution of a bank.
PesaLink today has over 60 participants in the ecosystem. This includes all the banks, but one, which we shall have on the ecosystem in a few months to come. We also have a telco, right? That's Telcom Kenya. We have microfinance banks, we have SACCOs, we have fintechs, and we have PSPs. So we serve, like I said, a broad spectrum of participants in the payment space. The growth of PesaLink, and therefore the growth of instant payments, so it's not actually PesaLink, it's instant payments in the country, has been 60% year on year. Right, and that just speaks to the demand there is for instant payments, primarily movement of funds between bank accounts. In terms of processing volumes, we are now doing up to 4.5 billion per day. Interestingly, the payments we see happening in the instant payments world that we power, 50% of them today are business related. That's either a payment to a business or a payment from a business. And we're very proud to have achieved today a 97 to 98% transaction success rate. And I call that out because we have the challenge or the pleasure of having to orchestrate all those 60 plus participants that I've told you. And anytime a transaction is moving from one point to another, it goes through potentially up to 5 different systems. And within those 50 seconds, those 5 systems have to be up and running. That's ourselves and 2 each from the sending and receiving side. So it's truly like orchestrating a band.
There continues to be a high number of complaints from customers on the high cost of financial services, unsatisfactory customer services, poor customer experience, and lack of transparency and disclosure. This, coupled with the growing fraud incidences with increased digitalization, are eroding confidence in the financial sector. It is imperative that financial services providers rationalize their cost, enhance customer service and experience, and scale up transparency and disclosure of their terms and conditions. Additionally, raising awareness among customers on emerging forms of fraud, including social engineering and identity theft, is imperative.
And 1. Governor, please, you can press there. Thank you so much. Let's appreciate the official launch of Chora Plan. Plan your money, plan your finances. Thank you so much. Wonderful, wonderful. Thank you so much, Governor, for that.